My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, Bob Mortgage Nation? This is the 75th episode of the Mortgage Report. That's right, 75 weeks of delivering to you guys what's happening in the market, the bond market, and what's happening with interest rates. Every week I come to you to deliver this report every Monday morning. Now, if you're following me on Instagram, if you're not, go to instagram.com/BobMortgage. In my stories, I'll let you know if anything's changing on a daily basis that would make me convert from a locking to a floating position or from a floating to a locking position. That's where you'll find that daily update. Okay, so what's going on this week? Now, if we go back to last week, September 24th mortgage report that I released, I said, look, we have two big things that's coming out. PCE, which is the Fed's favorite measure of inflation. We also had the Fed meeting with interest rates. Well, PCE came out, and those reports show that inflation was very stable for August, so that's good. And we also had the Fed make their announcement on Wednesday, and we already had told you it was a take it to the bank certain Fed fund increase of 25 basis points. So what did they do? They increased it 25 basis points. But in that report, I also stated that it's not so much that, it's going to be the statements coming out of the announcement from Fed Chair Jerome Powell that was basically going to determine what's happening with the bond market. And it was very bond friendly, his comments were. Before we get to the charts, because I want to show you what happened, the Fed also stated that like 12 out of the 16 members are stating now that we're going to have a fourth rate hike this year, and they're already projecting 3 rate hikes for 2019. So just kind of give you some idea, we're already at this, we're already like at the highest rate level that we've seen in the last 7 years. So let's take a look at the charts right now. This is right here is where we were on the 25th, which was on Tuesday. Once the market opened, Fed made their announcement, and Jerome Powell started talking after the announcement. You started to see this increase right here. So we were at the floor of support on Tuesday, opened up in the middle of the trading range right here, and then those comments, those post comments, were enough to allow us to break above that ceiling of resistance, which now became the ceiling or the floor of support. And look at the run up that we've had the last couple of days. It's been a really nice run up. Now, what I want to point out to you is look at this gap right here. We have about 30 basis points gap to be able to run up to the 25-day moving average. Okay, so with that, bottom line, I am going into this week floating. We do have a busy week this week, economically speaking, so we're going to watch the markets, see the news that's leading into those reports and coming out of it. But right now I'm floating because we have so much opportunity to pick up some bond pricing, which will lower interest rates even more. Look, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families. I watch the markets daily to make sure I could get you the right home loan at the right price. With Bob Mortgage, your dream loan is already within your reach.